Hello, everyone, and welcome to an update on Karora Resources, hosted by Six. I'm pleased to introduce Paul Huet, Chairman and CEO. Paul will walk us through a company presentation, and then we will be accepting questions live. So you can submit your question at any time on the Q&A panel on the right-hand side of your screen, and we'll get to them after the presentation. And as always, the summit is being recorded. It will be available to watch afterwards on six.com. So without further ado, I'll hand it over to you, Paul.
Thanks very much, Dasha. It's a privilege to and pleasure to give an update on the company. So this will be more of a condensed view of the slide deck, and it's actually my first update with you since I've been in Australia. So I've landed in Australia. I've completed the 2-week quarantine that is mandated by everyone with my family, and I've been underground at the mines and on site for 4 days. Actually, so just before we start the presentation, I just remind everyone that we have our forward-looking disclaimer that I will be talking about forward-looking statements. So look, just for a general reminder of the company, this is more of an update. Myself, Graham, it's great to actually be here next to Graham, working in the office right next door, having opportunities to discuss things. Just as a reminder, I've been... Before joining Karora, I was the CEO of Klondex. Graham was the CEO of Perseverance. So we've got a very strong executive team, and we've built a very strong team behind ourselves here. And you'll hear some about that here in the next slides. So more importantly, let's talk about the operations here. This is a slide that I showed last time at the Six presentation. In the center of the slide, you see our Higginsville mill. Look, I spent 4 days at our operations here last weekend and actually the week before. So they're really close to Perth. Actually, it's a 1-hour flight. So it's very convenient to jump on a plane early morning. You spend the night or two there and you can get back here into the Perth office and really take advantage of being so close. So I'm happy to report that first and foremost, that mill at the bottom of the picture, the upgrades of the mill are coming quick here. We had planned, the second half of the year to get to 1.6 million tons. We're already pushing the 1.5 million tons. So we've increased it by half already. We're already performing at that rate. Our production for this year was 105 to 115,000 ounces. So a 21% increase from last year. And look, last year was our first year ever. This is our second year as a gold company. So a very big step up. And that is pretty much weighted and aligned with the mill expansion. The mill expansion was key to us getting the extra ounces and bringing online some new areas such as Spargos that I'll talk about, the Two Boys, and the Aquarius. So I'll talk about all of them. So the first quarter results have come out. We did a very strong 25,000 ounces, right about that, at about 1,049 all-in sustaining costs. Not unlike we had planned. In fact, it was exactly as we had planned. We're looking to the second half of the year, as I said, for the production to grow. And that cost guidance of 985 to 1,085 will certainly be something that we will be achieving. Let me just switch over to the next slide here. So some of the objectives and the important things that we're doing this year, we've been working on a multi-year growth plan for some time now. I'm happy to report that it's really in the final stages. That is expected to come out here the end of June. So we had planned for Q2. We're going to get there at the very end. We're reviewing the final numbers. I've actually got to review them several times now with my team and the consultants. Obviously, we've engaged several groups to review the resource, reserve, the mine scheduling and everything. So I'm, again, excited to say that those numbers will be coming out this quarter in Q2. The Spargos resource update, that is also on track to come out in Q2. I was on the ground there at Spargos. So look, it was the first time I could ever see Spargos since buying it. I was never able to come here and see Spargos. We bought it for $5 million. We reduced the royalty. There is a lot of activity going on at Spargos right now. We've got our people, we've got contractors there on the ground. We're doing a lot of grade control drilling right now. So it's quite exciting to see the activity there. We had an old slide in our deck where you saw an old open pit. Well, it's nothing like that anymore. You can see it's cleaned up. There's a lot of people on the ground. And that is, as we had planned, coming online into Q2 of 2021, the startup for Spargos. The mill expansion, again, I said it earlier here, I was actually at the plant. I spent a full day at the plant looking at what we have done. It's more of a debottlenecking exercise this year. It's about $3 million in capital, but it gives us that extra 15% increase or 550 tons per day. Look, I've worked at mills that are only 700 tons a day. So increasing a plant by 550 tons per day is a significant increase while we're not spending a lot of capital, and we can take advantage of the feed that we have. We have a tremendous amount of feed. This year, one of our big objectives and a step up from last year is our drilling and our exploration program. We've got $20 million. You've seen some results already. We will continue to put out results as we get them in the market. The 2021 reserve update, that's on track for the fourth quarter of 2021. It will, for the first time, it'll include areas like the Larkin zone. It'll obviously have the newer Spargos update as well. So there's going to be some additional stuff that was excluded last year that we're going to get to include this year. That'll be quite exciting. As you know, we discovered Larkin in September of 2020. So, and then the last thing before I flip to the next slide is the ASX listing. Look, we get asked all the time about the ASX listing. With respect to the ASX listing, it's something we've been evaluating for some time now. We have a lot of inbound calls and a lot of demand. And now that I'm here in Australia, I'm able to meet with funds and hear some of the funds. There's a certain level of appetite for Australian funds to buy into a company like ours, especially considering all our operations are in Australia. So the ASX listing is certainly high on our radar and something we continue to evaluate. The high-grade Larkin zone here. We've been talking about this for some time. We've identified a zone about 650 meters. It's south of Alpha Island Fault to the right. We had identified this area last year, a new zone. It's almost double the grade from what we're currently mining at. That's what makes Larkin so exciting. So we've got a new area. It could extend up to 1,000 meters. It's open in strike at this point. I was underground at Larkin. I spent quite a bit of time with the team there underground. I was able to touch the face. I took a lot of pictures of the ore we got to see. It's a very unique situation here because we've got the gold and nickel actually on the same face. So what I was able to witness with my own eyes is about 3 meters of gold and then 2 meters of nickel all on the same face, which is very, very unique. I've never had that in my career, at least. We had always planned to have mining in the Larkin zone in 2022. We said, look, we needed to drill it, identify after the discovery, put in infrastructure. Again, I'm happy to report that while I was underground, we are currently drilling now. We've got a drill actively defining the Larkin zone so that we can plan our mining sequence. But more importantly, we needed infrastructure there, and we've been telling the market this. We've been telling everyone, our shareholders, this. While I was there, the raise bore was being set up. So that raise bore, the pilot hole was started. We're looking at a couple months to get that infrastructure in place. And then once we have the ventilation in place, we can start moving relatively quickly at starting to mine, at least on development on this. So I won't be surprised that we're going to start to see some development rounds into this area, the Larkin zone, into 2021, which could be extremely exciting. And look, 2021 is a pretty big year for us. We're doing a lot of things here. We're doing the mill expansion. We're bringing on Spargos. We're bringing on the Two Boys underground that we've been talking about. And we're bringing on another underground at Aquarius. So adding this other area, that's an awful lot for one company to be doing all at once. but we're working throughout all of them in parallel, and it's coming along quite nicely, actually. And you get so much more benefit from being able to go underground and looking at it. It's so much, there's such an advantage of going to see it firsthand. So let me go to the next slide here. So what I wanted to highlight here is, here's the 50C zone, the 30C zone. And look, most people know that Beta Hunt was a nickel mine. We have seen already in Karora, we have seen savings of up to $30 an ounce. That's very meaningful for us on every ounce, $30 savings on every ounce for nickel that we produce. And when you consider the nickel that we've produced so far, it's been averaging at about a 2.6% nickel. Look at the results of the 50C zone. Look, I'm not a geologist, but it's hard not to get excited when you intercept stuff that is north of 10% nickel here. So we've got these complete areas. We've got the 30C where I've got this highlighted here. We've got the 50C here. We need to drill in between here. This whole area in between needs to be drilled and understood. We start adding double that grade. Again, we've been mining about 2.6% nickel. You see nickel grades doubling 5% or more. Can you imagine the reductions we can realize on our costs? Having that nickel as a byproduct credit is a differentiator for us. It changes things a lot from our mine. I worked in a lot of gold mines in my life, and all of us have to rely on metal prices, managing our cost grade. We don't often get the luxury of having a byproduct credit. This is a great example here. We have infrastructure in place. Beta Hunt was a nickel mine. We have some tremendous discoveries. The 50C is a new discovery. It's the first new discovery at Beta Hunt in more than 12 years. So understanding this and taking advantage of it is something very high on our list of priorities as we continue to unlock the value of Beta Hunt, because Beta Hunt is certainly a very unique operation, there's no doubt. Actually, here's a good slide here. And again, you'll hear me say this. I know it's a short update because it's the first update since I'm in Australia, and I might sound a little excited. It's because I am, actually. I've been sitting in North America here for a year, stranded by COVID, unable to get here to our operations. But here you get to see our actual operations here. On the left slide, that's Aquarius. That's that box cut we're doing. We're actually putting in the box cut in order to access that Aquarius underground. And Aquarius, we disclosed some very high grade intercepts inside Aquarius. This year, we're going to be, as soon as the box cut is complete, we're going to put in the waste development and start accessing that ore. And once again, as I mentioned, we'll be mining in Aquarius in the ore. We'll be in the waste really soon here now, but in the ore, we'll be mining in Q2 of 2021, where that mill increase is going to accept that additional ore from Aquarius. And to the right, we've got one of our high-grade open pits here that we've been mining, and Two Boys, actually. Two Boys isn't here, it's south of this picture, but Two Boys is that second underground that we're putting into operation now. Again, I spent half a day underground at Two Boys. It's a very flat-lying deposit. We've got a lot of contractors there using jacklegs, but a very, very healthy seam of quartz vein there, and running almost twice the grade as our average grade of Beta Hunt. So our average grade of Beta Hunt with the gold alone is normally around that 2.6 to 2.8. We're seeing grades about 4.5 to 5 gram at the Two Boys. So with that mill expansion coming online again, and the added tons, we'll have place to put them. So it's a pretty exciting time for us in our company, actually. I ended up talking a little quicker than I thought. I knew that I had to go pretty quick. So anyhow, this is a summary slide here on our performance. So those of you who've been watching, you can see, I think our share price has gone from about 350 to about 420. We've had an exciting movement here on the heels of some good marketing. Despite me being in Australia, we are still marketing aggressively, and we are seeing some good institutional buying and some people increasing their positions significantly. We have 7 analysts covering us today here. That's a big change from where we were a year ago, sitting on 2 analysts. So a big step up from where we were. So what I really wanted to do, Dasha, is really give a really fast update and talk about what I saw underground and really turn it over for questions. And I just want to say, like, being here and able to work with Graham and the team and getting underground, it's so much different than anything else. You get to really get an appreciation for all the hard work that we are doing. So with that, I think we're right at close to that 18 minutes. I was supposed to go 20, so we'll switch it over to questions, Dasha.
Perfect. Thank you so much, Paul. All right, we'll jump right into Q&A. We got some questions emailed in. So, Paul, earlier this week, Australian gold miner St. Barbara announced downward production guidance revisions, largely due to labor availability in Western Australia. Are you seeing similar pressures at your operations?
So look, Dasha, I did see that St. Barbara press release. I did read that, and it's unfortunate. We've been really blessed. I'll tell you right now. Again, I'm able to witness it firsthand. I'm here watching HR and some of the things that we're doing to attract people and retain people. Greg Mitchum here, our VP of HR, has done an outstanding job with his team to make sure that despite all the challenges we're having with COVID, everybody here in Western Australia is competing. There's a bubble in Western Australia. There was 6,000 people flying in from the East Coast that were occupying underground jobs for every company. Those 6,000 people are no longer able to fly into Western Australia, Dasha. That makes it really challenging for all of us, and not just St. Barbara, all of us. But I'm happy to say, look, if you look at our last 12 months, our first quarter here in 2021, the results were very solid, a very solid performance. I'm very confident to say that our production results for the remainder of the year, despite the challenges we're going to overcome, will remain intact. Our guidance for the year remains very strong, and I'm very confident we'll deliver it, mitigating everything we have to with the labor shortages, because they're real. They're not unreal. We see it more with our contractor, and we put in a lot of steps working alongside them to make sure we don't fall short of our production, because look, that's our reputation and everything. If we fall short of the production, it's hard to make that up. So we've got to maintain it. So good question, though.
Of course, yeah. Are you seeing any improvements in turnaround times for drill assays? And is there anything you can do to alleviate the situation?
Yeah, look, so that's another real problem that the industry faces. Okay. So another advantage of being here in Australia, right now, today, 100% of our assays are being done from an external lab. I was able to spend some time at our new facility here. We have just finished over the last 5 months, through the efforts of our GM there, Don Harper, and our mill manager, Dennis Noon, building our own lab here. And I've got quite a bit of experience in labs myself personally. So I spent some time going through the lab. What we're going to do, Dash, is we're going to put our own lab into play here. So it's going to be up and running. We're talking maybe a couple weeks from now. Call it 6 weeks from now. Right now, what we're doing is final testing. Our lab is, the equipment's bought. We've hired the people. The facility's there. It's on site. What we're going to be able to do is take 50% of the assays and start doing them in-house, really reducing that pressure on the outside labs, or reducing our reliance on just turnaround time from outside labs, because they are getting delayed. When you have such an aggressive drill program and you're spending so much dollars like we are in 2021 on exploration, it's important that we get those results quickly so that we can know where our next location is for our drilling. We don't want to be wasting dollars. The turnaround time is very critical for us. So putting in this lab, building the lab and commissioning it, it will certainly mitigate that risk for us and our shareholders significantly.
Right. Well, that's great. So when do you plan to bring on production from the Larkin zone at Beta Hunt, and what steps need to be taken to bring on the production?
Yeah, so look, again, there's nothing better than going underground with your cap lamp and actually touching the rock and feeling it and being able to walk the drift. What I witnessed underground was a drill turning. We're defining the zones now. Where we had planned, again internally, we said, look, we expect in 2022 Larkin, and be mindful that we're doing a lot of other things with Spargos, Two Boys, Aquarius. So we knew we had a lot on our plate with the mill expansion. So, but we've managed to still in parallel bring forward the Larkin zone. So I expect that probably in the first quarter, probably early January even, I'll go out on a limb and say January, we're likely going to see ore from the Larkin zone, which is quicker than we had expected. We thought, look, 2022 and maybe third quarter, but we've had some really good success with a couple things, getting drills and the raise bore. The critical thing for us, Dasha, was putting in that infrastructure. We need the infrastructure in place for the ventilation, and we're going to drop power down that raise as well. So putting in the infrastructure for our people to be able to mine in there, we're able to take advantage of a lot of the old infrastructure with tunnels, but we needed some ventilation stuff. And I witnessed that raise bore drill actually putting in the pilot. So that pilot's ongoing now. Infrastructure will be in the coming months. So I fully expect that by early 2022, we'll probably be stoping in the Larkin zone, which is, again, pretty significant considering we discovered it in September of 2020. So it was recently discovered. We're aggressively doing drilling. We're aggressively finishing mine plans, resource reserves, and it'll be included in the resource reserve this year, and then putting it into the plant. So that's quite aggressive from our standpoint, especially on the heels of just discovering it. And the grade is significantly higher than our average grade of Beta Hunt.
Oh, that's great. So Paul, with your background in underground mining, what opportunities do you see at Beta Hunt?
Wow. So you're getting these questions. People are emailing these, right? All right. So with my background, what do I see at Beta Hunt? Look, there's no doubt, Dasha, Beta Hunt is a unique mine. Let me just talk just about the district first, and not just Beta Hunt. I'll come back to your question. So Beta Hunt and the HTO. Look, we for the first time in 20 years have unlocked this district by renegotiating these royalties here. I know that it's stuff in the past, but we're feeling it, and we get to take advantage of it now with a higher metal price. And our exploration. Our exploration is so big because we did that work ahead of time with unlocking the value of the royalties. So when I think of Beta Hunt alone, look, I've been mining 33 years. I've only had one other operation I've worked at in my career that I've been responsible for that had the advantage of having these byproduct credits. And I've already said, look, we realized to date already $30 per ounce saving with the nickel. So where I'm heading here is Beta Hunt is different than so many other gold operations because of the nickel that we have there. That byproduct credit, we have yet to understand it. We were always targeting the gold. We have the money to do it. We're going to be drilling and trying to understand this nickel and pushing ourselves, pushing to see how much we can just get to a cost reduction. Remember, the royalty reductions we did were significant in dollars, and they were about $45 to $50 an ounce. We could potentially see that type of saving from nickel credit. So Beta Hunt on its own, because of the byproduct credits, it de-risks the operation. It separates us from many other companies that only rely just on gold price or grade and cost. So we have an extra component that's different from so many others. So when I think about Beta Hunt, it's a very unique deposit. It's a deposit that's been very good to our shareholders, and it will continue to be good. And look, I know the question was about Beta Hunt, but I can't help but just finish off by saying we really need to, I should just throw a pinch in here for Higginsville, because look what we're doing at Higginsville this year. Mill increase. We're bringing online Aquarius this year. We're bringing online Two Boys this year. We're bringing online the newly purchased Spargos this year. That's all Higginsville. So while I'm very excited, and it's hard not to be excited about Beta Hunt, I'm equally excited about the team and everything that we are doing and accomplishing at Higginsville. So a long answer there, but it's worth giving some of my background. Actually, again, only one other operation that I worked at had really good byproduct credits, and they're very valuable. Look, when gold prices go down and you have these byproduct credits, you're very happy you have them in your back pocket.
All right, well, thank you. So, Paul, the next question is, are labor and COVID-19 related challenges impacting the timing of the upcoming growth plan?
Yeah, so look, we've been very excited about this growth plan. We've been talking about it since the fourth quarter of 2020, and there's no doubt we would have liked to have it actually sooner. But here's what bottom line is this: I'm happy to say that we're in the final stages. We will get it out by the end of Q2. We had hoped, actually, we were kind of hoping that we could get it out in April, May timeframe, but we are reliant on external contractors and consultants to some degree on this thing. So we will meet the target that we put out to the market, but it did impact it. The skill set did delay it for us by a month or so, but still meeting our timeline. So I guess I should have opened up, Dasha, by saying we will meet our target. So end of June, we will have that growth plan. And look, I've gone through it. I'm going through it after this call here. It'll be my fifth version going through it with the team. And I'm excited to put it out. I'll just leave it at that. I'm excited for it to come out.
Wonderful. All right. Dana has a question. She says, Paul, congrats on the share price making new highs. She wants to know about Two Boys. What is the motive to go underground, and what is expected grade in tons per day?
Yeah, so Two Boys is a very unique opportunity. Again, there's infrastructure there. It was an older operation. It was saddled with the royalty. Nobody wanted to go underground there. The motive is great and low cost. So we get to increase tons. The tons will be, it's not a high tonnage. It's similar to the tonnage I had in Nevada here, but it's going to be adding, call it 400 tons a day, anywhere from 300 to 400 tons a day at an average rate, call it, between 4 and 5 grams. So that's significantly higher than our 2.6, 2.8 gram. When you start replacing some of that 2.6 gram with 4.5 or 4 gram, you're talking almost 40% increase there. My math right? I'm just doing it on top of my head. But yeah, the motive is simple. It's about making money. It's about de-risking things for ourselves and making sure we continually make money. And that's the best way to make money, is take advantage of the feed we have in the mill by putting the best grade we have into the mill. And Two Boys is right there, right at the plant. No haulage charge. It's right on the heels of the plant. It, again, had the royalty, which made things a lot more challenging. Since we've removed the royalty, we've created a lot of opportunity, including Aquarius, that had the 7.5%. All these new areas that we're bringing online, we're subject to these high royalties, which is why a lot of people didn't pay a lot of attention. The people making the most money, or a lot of money, would have been the royalty holders rather than the shareholders. So in our case, it's going to be different. So.
All right, thank you. We have time for just a few more questions. So you have the cash. Why haven't you paid off your outstanding debt? Do lenders not want to give you a better rate than the onerous one you have now? Is the present debt fixed term and penalties associated with early payment?
Yeah, look, whoever asked that, that's a great question, by the way. It's a great question. There's several reasons here. So lenders absolutely would like to give us the debt. Our weighted average cost of capital has come down so much here now. It is best for us and bankers to actually get our growth plan out. It makes more sense. We would get better terms from any banker to look at this over a new growth plan. So we are doing that. Again, June it comes out. We do have, like other people, penalties for prepayment, but it's up in July, our debt. So we have 30 million. We have paid some down. The stuff that we paid off that had no penalties. There was two parts to the debt. But we're looking at refinancing the debt at a much cheaper coupon. And we are going to get term sheets. We've been speaking to 4 different groups already. Once our growth plan is finalized and we give it to them, we're going to get term sheets, and you'll see that we'll restructure that debt. And look, cash is important for any junior company at looking at what to do for our shareholders. So that's a very good question, actually.
Great, thank you. So Adrian's question is, was any of the new equipment purchased electric? Can future equipment be?
Yeah, so the new equipment we bought was trucks. So that's another great question, actually. Wow. ESG and everything is, look, I'll take the plug on ESG. I think ESG is really important to us, and making sure our carbon footprint is reduced is very important. We've got a complete team working on that. The new equipment was not electric. It was trucks and scoops. They're larger pieces of equipment. There are some electric ones. Ours were not electric. However, they're reducing carbon emissions by more than double. Because it's brand new, it's not older equipment. The emissions and the diesel particulates that we're getting from this equipment is way less than half. So it's significantly better. We are looking at some electric equipment going down the road, and we're looking at a lot of ESG initiatives that we will be reporting on in the future here. So that's a good question. I like that one.
All right, perfect. I think we have time for one more. I'll squeeze it in really quickly, and then I know we have to close things off. Marcel is asking, do you find the market doesn't understand the significance of the maiden drill results on Lake Cowan? I believe drilling was completed end of March. How excited are you to get the latest essays?
Yeah, so look, there's no doubt that's a very exciting thing. I failed to mention it today because I was just focused on my tour underground, not because it wasn't important. It is very important, that Lake Cowan discovery. You know, I just got to Australia here. I've been here for a month. I've met with a lot of other companies. I had the privilege of meeting with a very large mining company here, and they had a discovery that was half of our discovery on one of the lakes here. And I can't mention their name, but I was in the meeting with the executive, and he said, look, it was half of yours, Paul. It was 0.8 of a gram. And we didn't follow it up for almost 8 years, and it turned out to be one of our greatest areas. So that Lake Cowan discovery is very significant. We are going to be following up on it. We are mindful that what goes into the mill. So even Lake Cowan, it's not something that would go into the mill immediately. It certainly opens up exploration and says, look, our district, now that the royalties are gone, is much larger than we had ever anticipated, because we were just hoping for analogs. Our geology team said, look, if we get sniffs of it in parts per billion, we're going to be excited. The fact that we hit 1.5 gram in an initial maiden, that is significant. And actually, I'd say maybe the market is realizing it, because on the heels of the marketing we've done, we've been discussing it, and you can see the share price from 350 to 420. We know that the marketing that's been discussed, and there's been quite a few buying at the institutional levels. And you can see the liquidity. We had one day at $11 million in one day for our company. So several of the institutions are understanding it. And I think maybe some people are understanding as well. It could be something really good it could be very significant for us. So.
Great. Well, thank you so much, Paul. That is all the time we have for today. There's just so many updates in a short amount of time, but I would like to thank everyone who joined today and submitted questions. I know we didn't get a chance to answer all of your questions, but we will be emailing out a short survey, and the Karora Resource team will be happy to follow up with you directly and answer all of your questions. You can also find more information on their website at karoraresources.com. And as I said, this summit is recorded and will be available to watch afterwards on 6.com. So I'll pass it back to you, Paul, for the final word.
Yeah, look, I just want to thank everyone for joining. I know that everybody has a busy schedule, and I can't be more thrilled than to report being here on the ground in Australia with my family and going underground and to our operations, the mill, the team here led by Graham, the 2 GMs, Phil and Don, are doing an outstanding job. As shareholders, I can assure you, I got to witness it with my own eyes. And maybe when COVID is not so bad, maybe we can host other tours here. We're hoping to have an analyst tour, and some people can get to see what I got to see, because I think you'll get moved. I think when you come underground or you come to the sites, you really get to get an appreciation of what's going on and how much work we've accomplished and what we're going to do this year. So thank you everyone for your time.